wanted to take a minute and show you this graph and walk you through what we're looking at here. This is a 30-year fixed rate mortgage average in the United States. So this is over a 1-year span of where rates started. June 5th, we were at 6.85. And then now today, June 4th, so a few days, 6.48. So the reason I wanted to show you this was just to kind of keep things in perspective. So that's a 1-year history. Now we look at 5 years, and you really kind of are starting to zoom out here and see like we're still in this 6 to 7% range. We've been there for a while. There's no new news here. Know that rates being between 6 and 7% is totally common. We've been there now for a couple years. And if you go back 5 years, sure, back in 2021, rates were 2.7, but that's just not realistic. The Fed kept those rates artificially low. So now we'll go back and look at the 10-year. And you can see we're going back to COVID. Right after COVID, rates were super low. Rates then spiked, right, hitting almost 8% here in November of 2023. And again, we're just hovering along in this channel between 6 and 7%. Now, if you were to go way far back and go to the max, we can go all the way back before 1971 April. And we can see through these gray bars, all these recessions, but you can see rates are nowhere near what they were back then. And overall, like rates have come down in a major way, and they spiked a little bit after COVID. Anything within that range is pretty much dialed and could be for the next 10 years or so. The tide coming in and out every day is what the markets do. But this here is like the overall climate. And you can see that the climate is relatively stable, that we're okay.